evening and welcome to ET Now Startup Central, India's first and only daily show dedicated to startups, technology and entrepreneurship. I'm Chandra Shrikant, coming to you live from India's startup capital, Bengaluru. It's a Friday evening, so we of course kick off the show with our Friday funding meter, courtesy data from Venture Intelligence. It's not been such a great week in the universe of startup investments. Of course, a lot of holidays because of the festivals, a lot of investors themselves on leave, which explains the single-digit numbers that you will see on your screen. So according to data from Venture Intelligence, for the week ended November 5th, we are seeing about 4 deals worth $53 million. Not too bad in terms of the amount if you compare it to the previous week that saw 9 deals worth $51 million. If you look at some of the notable VC deals, it includes the likes of Meesho, which raised $50 million. So I think that alone would have accounted for a majority of that 53 million number. You also had Let's Meet that raised 1.2 million and Tires and More that raised $1 million. So, varied variety of deals, but social commerce seems to be making a comeback. If you look at Meesho raising that big sum. But to analyze this, and also an interesting trend that we are seeing where there is a dip in angel investments across the startup ecosystem. We have two special guests on the show. We have Arun Natarajan, the founder of Venture Intelligence, joining us from Chennai, the person who really helps us collate this data. We also have Aprameya Radhakrishnan. He's a co-founder of Taxi for Sure, which was later sold to Ola. He's an active angel investor, and he's recently started up his second startup called Vocal in the local language space. So I'm going to go across to Arun Natarajan first. Arun, take us through these numbers. Not such a great week, but Meesho seems to have clearly hogged the limelight. $50 million out of the 53 million, the total tally that we saw.
Indeed, Chandra. So the week was dominated by the Meesho investment, but regardless, of the festivities, you really cannot describe this week as, uninteresting. Meesho is clearly something, we saw 3 new foreign investors come into the company, the likes of Shunwei, DST Global, and a new first-time investor into the country in the form of RPS Ventures, which incidentally is founded by the SoftBank veteran Kabir Misra. So, very interesting investment, and even more so, the company had just raised its Series B investment in June. It's a matter of months, and at that time they had raised only $15 million. Now, a single $50 million round clearly sets the tone for the year, So, companies, and if you remember, ShareChat raised money from 2 of these same investors, Shunwei and DST Global. Again, more than one investment during the year, and very, very reminiscent of the 2015, phenomenon. So I would say very interesting week. You mentioned the other investment, which is, in the Tires and More, which is a strategic one. So the investments are really flowing from all quarters, foreign investments, Indian, strategic. So, I would say, we're looking at quite exciting times at least in the growth capital and the strategic investment and the family office segment.
Right. Hold your thoughts there, Arun. We also have Aprameya Radhakrishnan joining us on the show. Aprameya, one trend that we've seen across the angel round is how it's been declining. This was something that's been flagged off at multiple forums. And if we look at some of the angels who were very active a couple of years back, be it, Google's Rajan Anandan, the founders of Snapdeal, Flipkart, Anupam Mittal, yourself, that's really dwindled in the last couple of years. So if I look at your own tally according to Venture Intelligence, some 6 investments in 2015, 8 in 2016, 3 in 2017, and just 1 in 2018. What really explains the dwindling number of angel deals?
Well, I think 2015, the deal flow itself was quite alarming. As in, there were a lot of startups starting up, probably because of the amount of funds that people were pouring into, startups then, with SoftBank making a lot of investments in 2015 as well. Right, so I think a lot of startups were started then, and and I had also kind of exited Taxi for Sure just then. So a combination of these two effects, I saw a lot more deals, put in my bets into a few more companies than what I've been doing now, right? So it was my first year as an angel investor as well. Over the last couple of years, I think, we've also seen a period where the funds did dry up for everybody as well in 2016-17. So that kind of, made, entrepreneurs start up lesser. And hence that reflected in the number of deals that an angel investor also would do, right? And in between, I also started my own startup, and focus went there. I've also kind of made my own selection criteria tighter on what startups I invest in and what I don't invest in. So a combination of all of these probably have made me invest lesser this year.
Right. But, Aprameya, it's not isolated to a few. We saw this as part of a larger trend in a startup investment report that NASSCOM released at the NPC. They said while growth stage has really taken off, I mean, just look at the number of unicorns that came out in 2018. It's really the angel phase, the very early stage deals that have been coming down. Is there a broader trend that you can possibly attribute this to, a broader reason why this is happening?
The quality startups are raising money. So, for example, the space that I am in right now with Vocal is the vernacular space. And there is a lot of money chasing startups which are doing quality work in the vernacular space, right? There's good money chasing education startups. There's good money chasing fintech startups, right? So I think as long as the idea is good and there is a good team behind it, there is enough money to be invested into the startup, right? Probably in the last couple of years, those significant trends haven't really stood out, right? Where, vernacular is one such trend, but apart from that, there are not too many more.
Arun, would you agree with that? That money is still chasing quality startups in emerging sectors such as local languages, also edtech and fintech, some of these other areas that perhaps we are seeing fewer deals, but there are deals if your idea is good or if your product is good. What do you make of that?
Clearly, the angels really need to track today what the VC investors are likely to be doing, 18 months or so later, because clearly no angel investor waits all the way to an IPO or an M&A for an exit. The exit that they get are typically in the Series B, and clearly now that the Series B is becoming stronger, they need to read the winds in that sense and invest in sectors ahead of time. So you really look to angels to invest in trends, not when the VCs catch on, but quite ahead. So e-commerce is something that they seeded, but the other challenge is probably some of the established entrepreneurs are clearly seeding their own companies, skipping the small ticket angel investments and going directly for a seed and a Series A is my reading of this, rather than particular sectors, because if you wait for angels to kind of follow what the VCs are doing, it will be too late for them.
Okay, remove the third one. I'm going to the fourth. Right. Aprameya, I just want to understand, is there also, the issue of more and more money going into the same kind of companies, VCs also being very careful about, basically the funnel hasn't opened up beyond angel. So if I've put in an angel investment, I'm not getting enough seed or Series A people to actually fill that gap, because the VCs in Series A, Series B growth stage are focusing on funneling more money into their existing bets. Could that be one of the reasons?
So there's a combination. So the same VCs who probably can bet big at a later stage are also writing seed checks, right? So, they are getting their own deal flow by investing in 10 startups very early with very minimal risk, right? By putting very small amounts of money and seeing how the team performs and the market kind of evolves for that particular startup. Right? So I think the broader trend that you spoke about, where all the VCs have raised a lot of money, all that has to be deployed. There are only a few startups which are really doing well. So your broader trend of higher amount of money going into fewer startups will be there, whereas there will be small amounts of money being bet on a number of startups to make sure that there is a deal flow for the later stage as well.
Finally, Arun, before I let you go, how much of a issue is, the regulatory hurdle around angel tax that's been spoken about? Do you think the policy side is also a factor why we're seeing dwindling interest from angels, or, is that reading too much into it perhaps?
No, definitely, it was not fun at all for so many of both the angels and their portfolio companies to get notices. In the last quarter, I heard from various CAs, for example, that, this is very prevalent. So many, and it's not fun. Clearly they're taking the risk at the highest level in terms of, really early stage companies, and to add one tax element on top, it's clearly not fun, and it did dampen the spirits. But even more so structurally, the angel networks need to kind of, or IAN, for example, has already started an IAN fund. They need to clearly be putting more capital to work and handhold the companies for longer, seems to be the message, because of the sheer capital size being required is no longer of the 50 lakh kind of variety that we were used to in the past. So companies are quickly scaling, and angels also need to ramp up their commitment levels, both in terms of money and the kind of rolling up in their sleeves and working with the companies. So if both of them add up and the policy also kicks in, we definitely I think back to good times, because clearly the Series B beyond is doing great, and it will trickle down. It's a matter of time, but regulation definitely should help in this aspect.
Right. On that note, Arun and Aprameya, thank you so much for joining us on Startup Central. We'll take a break at this point, but when we come back, we have to address another very important issue in e-commerce, and the deadline to deduct TCS or tax collected at source is running out. Barely a day or two left. How prepared are e-commerce companies? Is the penalty going to be huge? More details on the other side of Startup Central. Welcome back to 18 on Startup Central. Now, as I told you before the break, a very important deadline coming up for e-commerce companies with respect to depositing the tax collected at source they had collected from sellers. Just how compliant are they? What is this going to mean? My colleague Rahul Dama joins us with more details. Rahul.
Chandra, it's a known fact that the entire e-commerce industry was sort of opposing the move to implement TCS by the GST Council. It was pushed several times, finally sort of implemented from the October 1st. So tomorrow is the deadline that really ends for them to make the deposit of the tax that they have collected, 1% across their sellers. But, there are reports that the industry has been asking for a further extension, because there has been some confusion that sellers have been asked to register in the states and have a local state address, which really is the issue. But the center has already clarified the matter that the e-commerce company's headquarter can also be used as an address. So the states that are having an issue are Kerala, Punjab, Gujarat, Bihar, Rajasthan, and if the companies, e-commerce players don't really comply, they will really be a penal provision that will be really worked against them. We'll have to wait and see if an extension is really given at this time, considering the deadline is too close. So that looks unlikely. Remember, the GST Council had implemented TCS for e-commerce players to ensure that there's more compliance from sellers. They can also sort of scrutinize the turnover of these sellers and basically increase the tax bracket for the sellers who are selling a large number of products on e-commerce platforms. Also, the Diwali sale was last year, so a lot of sellers have made money. But we reached out to Flipkart and Amazon, who haven't really commented if they're prepared to really implement this move.
Okay. Thanks for that, Rahul. We also have a special guest to decode what this means, Mr. M.S. Mani from Deloitte, who studied the GST very closely. Mr. Mani, you know, as Rahul said, we've reached out to Amazon and Flipkart. They are not in a position to tell us if they are compliant or not. I'm assuming they're off on Diwali leave. But what do you make of this issue, this deadline? Is there any chance of them getting another extension? How is this going to pan out? How prepared do you think these e-commerce retailers are when it comes to this particular provision?
Okay, so I think to put things in perspective, we have to bear in mind that the TCS is largely an anti-evasion measure and also a measure to enable the tax authorities to collect data on the sellers. So this is not a revenue mobilization measure where the government is going to get a whole lot of money by the 1% TCS that is there. Now, if we keep that as the objective, it is very clear that this is something which needs to be enabled before people are able to put the tax. What has happened till now is like this. There is a need for the e-commerce companies to obtain a registration in the states in which they operate. Now, in the past, this required a physical premises in every state where they operate. Now, that if an e-commerce company is located in a particular state, it can also obtain registration in other states without having a physical presence. However, this has not been enabled on the website. And therefore, today, if a company which is based in Mumbai tries to get registration for the state of Kerala, it is unable to proceed because when they try to go and register, they are not able to proceed and the website shows only the addresses of the districts in Kerala. It does not show anything of Mumbai. So this, to my mind, is something which has not yet been enabled by the GSTN, on account of which people are not able to register, and since they can't register, they can't deposit the tax tomorrow. So the deadline we have to keep in mind is tomorrow. It's not a week away. Consequently, we are going to see a situation where companies which have collected the tax in the previous month are willing to pay the tax, are unable to pay the tax. And when you have a situation of this kind, the only thing possibly that can be done at this stage is to extend the timelines, maybe by 10 days, maybe by 15 days. I would say as long as it takes to fix the portal and to ensure that the portal is ready and available, till that time it needs to be extended. Bear in mind that here there is no revenue implication at all.
Right. So
because A, as I said before, it's a 1% on the sales. Right. It's not too much. B, right. This is tax already collected. So it's in any case going to come to the government. It can't go anywhere else.
Right. So Mr. Mani, based on whatever you've said, there seems to be a slim chance that the e-tailers will be penalized for this, because the fault is not at their end, but there seems to be a larger disconnect between the way the center and the state has gone about implementing this. They haven't been given an option to register in the states, which is why they're not able to deposit the amount already collected as TCS. So you're saying that a deadline extension certainly looks possible at this point.
I would say that there are two options available. A, that the deadline gets extended. B, the penalties for a delayed deposit of the tax be waived. Because technically, if anyone collects a tax termed as GST and does not deposit it, it's a major offense under the GST law. In this case, that major offense is happening because the website is not enabled. And to add to what you said in terms of center and state and the intentions not being translated, please bear in mind that this also involves the GSTN, because they develop the portal and they maintain the portal. So they also need to ensure that the portal is updated with all the changes that the center proposes.
Right. On that note, Mr. Mani, thank you so much for joining us on ET Now to really decode this. We will see how the next couple of days pan out if the government indeed gives an extension and how e-tailers respond to this. But on that note, thank you so much for decoding what this is going to mean, this big e-commerce deadline. But thank you so much for watching Startup Central and have a great weekend.